Hi, hello everyone. I hope you're doing well. Again, Friday, and we're going to have a market watch with each other. We're going to take a look at what has happened in the market for our favorite assets: Euro USD, gold, oil, and Dow Jones. But before everything, we are going to take a look at what has happened on Euro USD in the previous week, and then we're going to talk about our forecast uh, for this asset, and after that we will continue for oil, and then Dow Jones, and finally on gold. Okay, as you can see, it's Euro USD on the daily chart. So let's take a look at the asset. If you remember, I predicted the price to go to the top of the bear channel. Here is our bear channel, the top of our bear channel, and you can see the rejection near the top of the channel. It is about 4 pips only on the 4 hour chart. 4 pips is nothing on the 4 hour chart. And you can clone the chart and the channel, and you can see the low here and the rejection. It is so close to the 20 EMA moving average. So my prediction for the next movement is a little bit up uh, to the low, uh, the previous low, as you see. So here is the strong breakout from this low, but you don't see any follow through bars here. The next candle after the breakout is a bull candle. So you can conclude that there were buyers below this level. So you see that the bulls believe that uh, the price is too cheap to buy, so they bought the breakout. So it can be considered as an exhaustive move to the bottom of the bear channel, and you can see the gap closed. Here's the gap, the low of uh, previous leg in the bear channel, and then here you can see the rejection. But I believe that the price is going to go to the low of the bear leg uh, in the previous move. So the first leg pullback, second leg, and now we are going to witness the first leg up. Maybe since the the bullish move is not that much strong, so we are going to witness deeper pullback, or maybe the price is going higher, and then a pullback and second leg up. So for Euro USD on the 4 hour chart, I believe that the price is going to see the top of the bear channel, and after that we should wait to see what the price is going to do. And let's look at the asset on the 30-minute chart. So here is our bear channel on the 30-minute chart, uh, the odds are in favor of the bears. You can see the bearish move very strong, and a bull channel that can become a bear flag, meaning the second leg down is possible. Uh, it can be considered the third or fourth leg. The first leg can be this one. You can consider the whole move as the first leg and then pull back, second leg. Uh, I can consider this one as an exhaustive move. So uh, if the bears succeed to take the price down to the previous low, there'll be buyers to buy, and then we can witness another leg up from this level. But to me, the 4 hour chart is so strong, so the bigger scenario is going to work. But at the end of the day, I believe that the bulls are gonna succeed to take the price to the top of the uh, bear channel. So we should wait to see uh, what is gonna happen to this move. Um, Maybe not today, maybe in the next week, or the bulls are gonna succeed to take the price to the top of the bear channel, or we can witness a pain trade above the uh, bull channel, and another leg up to the top of the bear channel. Uh, the probability of this thing to happen is only 25%. For 75%, we're gonna witness another leg down and then another leg up. So we need to wait to see what the bulls and bears are gonna do. Let's take a look at oil. On the daily chart, the oil is in a rather sideways channel. I told you that they're gonna have another leg up. It happened. You can see uh, the drop and then the channel. Remember, every bear channel is a bull flag, meaning every bear channel will eventually break out from the top for 70 to 75%. And for 20 to 25%, the breakout will be from the downside. But in this case, the bulls have become successful to take the price to the top of the bear channel. And here you can see the rejection. So you can consider this uh, uh, trading range behavior, a trading range inside a bigger trend range. So uh, you can expect the price to go lower, but my prediction is that the bulls might be successful to take the price to this level, which is around $63. So the price of the oil might be $63. Not this week, maybe next week or next 2 weeks, but it is my ultimate prediction for the short term. As you see, the price is in a trading range. And in a trading range, there are two-legged moves. First leg, pull back. The second leg, it can be the first leg for the bears, pull back. Second leg, the second leg might be under this one, might go under this bull leg, or even below the low of the whole bullish move, or sometimes there are bulls down here, so they might take a price higher. We don't know yet, but we're gonna uh, learn about it more if we look at the 4 hour chart. This is the same pattern on the 4 hour chart. The odds are in favor of the bears right now, as you see. Maybe most of the traders are looking at the bullish move here, but you can look at the price like this. So you can see the breakout from the top of the bull channel, and then the rejection around the top of the bear leg, the whole bear swing. So there were sellers above. They took the price down to the top of the bear channel, and then below the top of the uh, bull channel, the bull leg in the trading range. So look at the price. You can see it more clearly now. So the bearish move, and then the breakout from the top of the bear channel. As I told you, the bear channel is a bull flag, meaning the breakout will be from the top of the bear channel, excuse me. So this happened, but since we are near the top of the major high, this is the major high for the bears, meaning if the bulls succeed to take the price to above this high, uh, it means that it is no longer a bear channel. What does uh, a bear institution want? Uh, they want lower highs. The first high, and then it can be considered a major low, but this one is more meaningful because of the strength of the bulls here, but they couldn't succeed to take the price higher, so it is more meaningful for the bears. There are a lot of stop loss orders here, because this high is so meaningful for the bears. And then you can see the bearish movement, uh, lower high, lower high, lower high, and again lower high, lower high. Here you can see the higher high slightly above, maybe. Yeah. Not yet, so close to this high, and then a new higher high, but it's still below this high. See? This high is below, this high is below this high. It means that bears are still in control, but the bulls have become stronger. And on the daily chart, you can see that the bears are becoming less powerful. See? You can see this low, and bulls started to buy once the price was close to this low. See? It shows the strength of the bulls. But here you can see the bear channel. You can put it here. And to me, the bulls are gonna try to create a major trend reversal, meaning they're going to try to take the price higher to the top of the most powerful high of the burst. So it is what the bulls want. We should sit and watch if they're gonna succeed or not. But for the people who are trading oil on lower time frames, the drop that we witnessed on Wednesday, it is Thursday, today is Friday. On Wednesday, we witnessed a sharp drop and then pullback, but the pullback didn't uh, go above the sell climax, and you can see the lower highs, lower high, lower high, lower high, lower high, and then a trading range behavior, and the bulls are trying to take the price higher, but the price is still below the. This is the most recent major lower high. If the bulls take the price to above this high, you should consider this move a big trading range. Otherwise, we can expect the price to drop. We can expect the burst to take the price lower to create a new lower low, or at least uh, it'll be a pullback for bulls to take the price to higher levels. So this is one scenario, and the second scenario will be a new lower low. For me, I believe that the bulls are gonna let the price go a little bit uh, lower to go against them, uh, because there were a lot of buyers who took profit here, and you can see the wedge pattern here. Small, but still working. Let me delete these lines. So you can see the wedge. It can be considered a rising wedge or a bull channel, a tight bull channel. Uh, and the scenario for the bears is they're gonna take the price lower than the moving average to the top of the trading range here, and then they should wait to see if the bulls are willing to buy at this level to make another higher high or not. If the bulls see this price too expensive to buy, they will let the price go lower to the bottom of uh, the low of the trading range, and then there'll be buyers to buy again. So this is the scenarios that I have for the bears and bulls. So the red one is in favor of the red arrow is the scenario that the bears expect to happen, the best scenario for the bears, and the white lines are the scenario that the bulls want to happen for the 15-minute chart. Dow Jones on the daily chart, you can see the tight channel, very strong move. Yeah, it is the tight channel, and the price is at the top of the tight channel, and you can see that the 20 EMA is supporting the price. So it went down for a candle and then went up, touched the EMA, went up, touched the EMA, went up. Here went a little bit deeper but went up, and now it went up when it got close to the moving average, meaning it didn't touch the moving average either. Uh, you should consider the strength of the bulls here. So many people are selling, but they should know that the pullbacks are so mere, so small, and the bulls are making money easier. Whenever you want to take a trade, you should consider if the side that you're taking is making money easier or harder. And you can see that the bulls are making money much easier than the bears. So if you want to take a short position, you should consider the position as a scalp. You cannot hold on the position to the bottom of the bull channel, because there are there are bulls to take the other side when it is close to the moving average. But if you want to take a short position, you need to go for one-to-one risk reward. I do not take a swing position if I want to sell. I look to buy. It's a little bit hard to buy on the daily chart, so you can go to the 1 hour chart to see if it offers you any setups to buy, and it does, in my opinion. You can see the very strong leg up, the first leg up, pull back, second leg up. It got very close to the top of the trading range, and then it started to go lower. Very, very weak bear. See, the first big bar, and then a turbo follow through bar, then pullback, and very small bars touch the moving average. I'm looking to buy, but the stop order, the stop loss order, is a little bit far. The stop loss order must be here. If you buy here, or buy here, it doesn't matter. The stop loss order must be here, because we don't know when the bulls are gonna enter and take the price higher. But I won't sell. I will not sell, because I do not see any strength from the bears. Yeah, I look to buy. If anything, I buy. And for the people who are more interested in trading on lower time frames, for example, the 5 minute chart, it is offering you a very interesting buy setup. Here, the breakout from the low of the bear channel, then a pullback, then another climax, a stronger pullback, and then another climax, and the rejection here. Yeah, you could buy here, but the stop is not below this pin bar. The pin bar is not that much strong. And the bears are trying to take the price lower, but the breakout might be from the top for 60%. Yes. But if you buy here, or if you buy here, you should be ready to put your stop loss order down here. Yeah, somewhere here. Look at this price action. So here could be the stop loss below this area. I don't think that the price is going to succeed to go here, but it is a very safe area to put your stop loss. Putting a stop loss means that if that thing happens, you have been wrong. That's it. So you shouldn't use a stop loss and let the market kick you out, and then move your way. So it's so harmful. It's so damaging emotionally and financially. So you should put your stop loss where you believe that, okay, I was wrong. But to me, the price is not going to uh, go here. No, if it does, so it's currently a bearish channel, a very wide bearish channel. But to me, the bulls are gonna buy from the low of the major low, which is here, or a little bit lower to the top. So the price is going to have this move. This is what I believe. And here is a very safe stop loss order for the bulls. And for the birds, the people who think that the birds are gonna win, let me delete these lines. Okay, and for the bear scenario, yeah, uh, the channel broke down to this level, so it's gonna be the pullback like this. That you can see the pullback to the uh, bottom of the channel and another leg down. That is happening. That is happening. Sometimes you enter a position that is for the bear scenario. Sometimes you enter a position where uh, the move has happened already. It means that the people, the birds, the strong birds, have taken their profits, and then you sold to them. Okay, so you need to be so careful about your entry when you're trading in a channel, and you can see the rejection from the bottom of the major low. So it is a very, very important low for the bulls. Okay, so we should wait and see what's going to happen. I will get back to this chart after talking about the gold and to see what's going to happen. And gold on the daily chart, you can see a very strong move, a very strong leg up, pull back, and another leg up. Okay, but look at this move. This move is not as strong as this move, but it is still strong. So it's better to look to buy. See, look at the pullbacks. This is the pullback for this move, and the second leg up started from here. See, look at the pullbacks. Very small, very small. Look at the pullbacks. Look at the bull bars. Very strong, very strong. And whenever the bears wanted to sell, they trapped. See, they sold here. The next bar is a bull bar. They sold here. The next bar is a bull bar. A doji bar, but it's still a bull bar. And here, it's going to happen. But the probability for the bears is they're going to try to take the price to down to touch the moving average, the EMA 20 moving average. So they might be successful, but if anything, I look to buy because when I see this move, I look to buy. I'm a scalper. I don't care if the higher time frames are bullish or bearish. I look at the time frame that I want to trade. But for the people who are trading uh, based on higher time frames moves, and they look to enter their positions on lower time frames, uh, I would look to buy if I wanted to trade that way. On the 1 hour chart, you can see a trading range behavior. This is the low of the trading range, or you can consider this low. Doesn't matter. You can use this low as the low of the trading range, or this low, and the high of the trading range can be this high. You don't have to be so obsessive about picking the right low or the right high, because different computers calculate differently. So you can consider all of these lows as valid lows, and you can wait for the price to see how it does react to the line that you have drawn on the chart, and then you can delete the line or the lines that the price didn't respect to. So I would, if I drew this line, I would delete it, because I can see a new high here that the price respected to, and I would delete this line because the market bounced up from this level, not this level. So it'll be my trading range. And here I am in the middle of a trading range on the hourly chart. So to me, for 50%, the price is going to go high. For 50%, the price is going to go lower. Okay? Because it is in the middle of the trading range, and it's been, if I consider the low of the trading range here or even here, it's been more than 76 bars, 75 bars, uh, that the price has been in a trading range. So the influence of this uh, bullish move is not as strong as it used to be when the price was here. See, many bulls thought, okay, a very strong leg up, then channel, then trading range, and then another leg up. That happened. That happened. It is a new high, but uh, bears sold, and a new low, then a new high, then low, and the look at the trading range. It's become tighter. So it is a tight trading range inside a trading range. So for 50%, it's going to go lower or higher. We don't know. But for the people who trade on the 5 minute chart, I took a trade before this live session. I took this position. It was my entry, and I put my stop loss above this high, and I exited when this bar was forming, because I do not hold on my position after the second TP, and I wanted to go online, so I couldn't manage my position, so I closed my position. Uh, it was a winner, and I told one of my colleagues to uh, take out the profit, her profit, at least at this level, because it's a very strong uh, place in level for the bulls, and I hope she has done it. See, now a clear trading range behavior. It is the beginning of the day. Leg down, pull back, second leg down, then leg up, pull back, or leg up, pull back, another leg up, or the first leg up, pull back, and then a second leg up. See, it is a complex leg up. And as long as actually it didn't uh, go above this high, okay, because there were birds to sell. So it can be the trading range. My trading range could be just like this, or you can pick any low or any high. It doesn't matter. The price tells you if your levels are correct or not. But I saw something else before taking my position, before taking this position. I saw this. Okay. So once I saw the birds started to sell, I assumed that it is the uh, last attempt of the bulls to take the price to the top of the bull channel. They started to sell, and then this happened. And since it's a trading range, I wouldn't buy here. See, some people assume that it is the bottom of the bull channel, so we can buy here, but they were wrong because it's a very wide bull channel. And for 75%, the bull channels are bear flags, meaning they break down. See, first leg down, pull back, second leg, down. So like A, B, C. Okay. And I expect the bulls to buy at this level. The birds are so close to this level, and the bulls have started to buy from this level. So let me just delete the extra lines. See, it is a very strong level for the bulls. They started to buy. How do I say that? Look at this rejection. The price went up to the EMA. EMA is a very strong support or resistance level. Here, it played a role of resistance for the bears. Okay, see, the bulls started to buy from this level, okay, and then they took the price to the moving average, and then the bears started to sell. Look at the computers. If you want to make money in this market, you have to understand what the computers are doing. Otherwise, you cannot make money. Okay, and then the bulls are confident that the price is going higher, so they didn't exit their positions. They're scaling in at this level. Look at the price. Look at the rejection. So some of them are buying from here. Some of them will wait to buy here, or if they see the price is going higher, they scaling in to buy more. And the final bulls will buy somewhere between this low, or the final low. Okay, look at the rejection. So if this low breaks down strongly, I mean the final low, which is at 45.91, okay, if this low breaks down strongly, and if you just see a very strong candle and then a follow through bar, you can expect the bears take the price lower. Otherwise, the bulls will buy. Okay, see, it is happening. it is happening. And the bulls now are taking out their losses because they're afraid. Look at uh, the size of the bearish bar. See? Here, the bulls are giving up because of the size of the candle. Okay, let's see what has happened. See? The bulls are buying. It is going higher, as I told you. I told you I would buy. And now it is going higher. It is price action. If you want to understand the next movement, you need to know what the price action is doing and then trade based on it. Otherwise, you will lose money. And as I told you, the bulls started to buy from here, then they scaled in here, and finally they scaled in here, and then the leg up. And I expect the price to go higher, even higher. Yeah, a second leg up, at least to the top of the bear channel, at least here. Yeah, because it has the momentum. So you should wait to see if the bulls are gonna succeed or not. Okay, that's it for today. I hope you have found this live useful. In the next session, we're going to talk about the same assets, but before that, we will talk about what has happened during the week and how our analysis worked out. And then we're going to talk about the next moves of the market in the following week and following days. Thank you for your attention. Have a good one.